Financial Planner. Follow us on YouTube.
Central banks of central banks warns this is more dangerous than 2007. Now, before I get started, I just want to make an announcement. I placed an interview on the X22 Report Spotlight. It is with Bill Holter. All you need to do is go over to X22 Report Spotlight on YouTube. You can see the video there, or you can come over to the x22report.com site, scroll down a little bit, look over to your right-hand side, you'll see the interview on the website, or you can go to Steemit. All you need to do is go to steemit.com/X22Report. It will bring you right to the interview, and you can play it right on the site. Let's get into the economic collapse financial news. Now, we've been talking about how the EU doesn't want the UK to exit, and they're doing whatever they possibly can to keep them in the EU. Now, there has been a report that has been revealed, and it's showing that Germany will do anything to stop Britain's hard Brexit from the European Union. And this new study has revealed the reason why. Now, what they're saying, this is coming from the Cologne Institute for Economic Research, and they revealed that if the UK leaves the EU, Germany could face economic disaster following the Brexit. Now, according to the study, many German manufacturers are dependent on the production of goods abroad, with many partners being based in Britain. In 2014 alone, the British supplied immediate goods worth around 200 billion euros to the EU, of which 36 billion went to Germany. So this is a problem for Germany right now. And we can see they're going to do whatever they possibly can to stop a hard Brexit. Now, we see the EU, they're pushing their agenda to stop what is going on. Germany doesn't want this to happen, and I could see why they are trying to push and make the UK pay a punishment penalty, and they keep raising it and raising it, trying to make them stay in the EU. And again, they haven't agreed on anything. It looks like insults are just flying back and forth, and nothing has been done. We see Jamie Dimon is out there from JP Morgan Chase, and he is saying that Bitcoin is a complete and utter fraud. And if anyone in his company is trading it, he's going to fire them. He basically says that this is almost the same thing as the tulip mania. The only difference is not many people are trading in Bitcoin. If you look at the entire population, it is a very, very small percentage. And what we see really happening right now is they're very nervous about cryptocurrencies. They're very worried about the blockchain. We know that they are trying to control the blockchain. And at this point, we could see that he is trying to convince everyone that this is something that you shouldn't be in. And Bitcoin did drop down a little bit. Now, what's very interesting is this isn't the first time Jamie Dimon has lashed out at Bitcoin. The last time he slammed Bitcoin was around November of 2015 at the Fortune Global Forum in San Francisco. And he said the following: "You're wasting your time with Bitcoin, virtual currency, where it's called a Bitcoin versus a US dollar. That's going to be stopped," said Dimon. "No government will ever support a virtual currency that goes around borders and doesn't have the same controls. It's not going to happen." Well, very interestingly, it is happening. Blockchain is like any other technology. If it is cheaper, effective, works, and secure, then we're going to use it. The technology will be used, and it could be used to transport currency, but it will be dollars, not Bitcoins. Now, we know that they're doing whatever they possibly can to steer people away from the crypto market, just like they tried to steer everyone away from the gold market, where they say it's a barbarous relic, you don't really need it, it's just a shiny piece of yellow metal, it's not really important. The dollar is actually the currency. And we've come to find out that, well, the paper and ink is just that, paper and ink. It's worth absolutely nothing, because what we've been seeing happen around the world is that every single country has been put into debt. And there is currency which is being created because of stimulus like crazy. And when you add more and more currency, guess what happens? It devalues the dollar. Actually, Bitcoin and many of the other cryptocurrencies, they have a cap, so you can't even go above that. Same thing with gold, silver, very difficult to find, and there is some sort of, checks and balances. But what's very interesting about all this, since he made those statements back in 2015, Bitcoin is up by 1,018%. And we could see at this point, he is trying to drive people and send the message out there that everyone should steer clear of the blockchain market. And this is what he's trying to do. We see right now that the August producer prices, well, they have risen a little bit, and this is on gasoline. And right now, the inflation mark right now is still very, very low. We know that the Fed has been shipping inflation off to overseas, into the stock market, into the housing market, and everywhere else. And if you really look at what is going on, and you can see what is happening like in the supermarkets with real fresh food, you can see that prices have definitely increased. Houses have definitely increased in price. Tuition in colleges have definitely increased in price. The stock market has gone up. This is all inflation. This is where they're sending the inflation. So we can see right now that even though the Fed is telling us that there is no inflation, that we had a little bump up because of gasoline prices moving up, inflation is a lot worse than they're really saying. And of course, once all the dollars come back to the United States and the dollar is devalued because there's a lot more currency in circulation, we're going to see inflation go completely crazy. Now, Charles Hugh Smith was out there, and he has been talking about the housing market, and he is saying that, something, every time we've seen the housing market do what it's doing right now, it ends up in a crash. Now, he created this chart, and he tracked the other bubbles, previous bubbles to the one that we're in now. And what's very interesting is that the symmetry of the expansion, the collapse, each phase is pretty much the same. And right now, we're equal to where we were back in 2008. And if we look at the chart, and if we look at what's going on, we can see that we are at the bubble high. Now, he says, when we look at the charts, a few things pop out. There is a remarkable time symmetry in each phase of expansion and collapse. Each phase took roughly the same period of time to travel from trough to peak and peak to trough. The index has now exceeded the previous bubble peak. And those that are denying the existence of cycles have difficulty adequately explaining away the classic cyclical nature of the 2008 bubble rise and its collapse. And when we start to look at this, we could see that, yes, we are headed down the same exact path. Now, there's a couple of reasons why the housing bubble has been pushed up, and we mentioned them before, because once again, the Fed, the central bank, is pumping in a lot of currency, free currency, and driving the housing prices up, because what they're doing is they're having hedge funds, investment companies buy these houses, hold on to them, don't put them on the market. Banks are not foreclosing on the houses. They're keeping them off the market to drive the prices up. We also see foreign investors, well, they are coming in with cash. They're flooding into North America, and they're buying real estate. But this is all coming to an end, because we've reported on this before, where the Chinese investors, they're being stopped from investing inside of the United States. A lot of their investment money is going to the Belt and Road. We can see that the stimulus, well, that is conking out right now. They're going to have to really increase stimulus to really push this further. And when we really look at this, we know the everyday American, they're sitting on the sidelines. Wages, salaries, they're declining. People are losing jobs. Retail is completely imploding. And we could just see from the mortgage applications that they are continually declining. I know that every time they tell you it goes up, but it's come right back down. It's really gone nowhere over a period of time. And we could see at this point that everything is starting to fall apart. Actually, the housing market looks exactly like it was back in 2008, and this is not a good sign whatsoever. We are now seeing there are warnings all over the place. Julian Robertson is saying that there's bubbles. They're all over the place, and it's the Federal Reserve's fault. And I agree with this. The Federal Reserve is the cause of these bubbles. They create these bubbles, and then they bring everything down. The former biz chief economist warns that we are at a period of time where it is more dangerous than it was back in 2007. He warned that the system is dangerously unanchored. This is the former chief economist of the Bank of International Settlements, William White. The current situation looks very similar to 2008, and he's saying that, listen, if we keep the way we're going, I think, first of all, it's too late. The whole thing is just going to completely implode on itself. And we're not just hearing one warning right now. We're hearing warnings from many different financial pundits. They're all coming out. All the individuals that were saying that the economy's fine, everything is fantastic, now they're coming out and saying, well, look at the VIX, look at this, look at that. The stock market is overvalued. This is not going to end well. It looks like there's a recession coming. We've been looking at all the economic indicators, and all of them right now, every single one of them that we've been looking at, that it's even equal to or much worse than 2008. And this tells us that we're getting very, very close for this entire system coming down, because we have reached the bubble points of where we were back in 2008. And in many cases, they're way above where they were. Just a couple of reports ago, we looked at each city, and we noticed that in each city, a lot of the bubbles are way above where they were in 2008. Now, let's put all this together. We have manipulation in all the statistical numbers. We have tax receipts declining coming into the federal government, tax receipts declining coming into the state government. We have pensions that are in trouble right now. We have the housing market, which is now falling apart. Prices are coming down. There are less people looking to purchase homes. Traffic is drying up. We had existing homes, we had pending homes, we had new construction, all declining at the same exact time. We have retail imploding on itself. We have in commercial industrial loans where they're starting to decline. We're at that same high point where we were once before. That's starting to decline. And we start putting all this together. What do we see? We see a major disaster headed our way. And now we have these warnings from Citi, from Bank of America, from the former chief of the central banks, the biz chief economist, saying, listen, we are at the same point of where we were in 2007, but it looks a lot worse. It's more dangerous now than ever before. And we can see at this point that all these people are saying the same exact thing, which tells us everything that we've been following, all the indicators have led up to this point. And we've been showing the slow decline, the slow deterioration of the economy. This is why you need to be ready and prepared. This has been done on purpose. It took them a very long time to pump this up. We've been following it all along. We watched it reach the height, and then we watched it come down. This gave everyone enough time to prepare. A lot of people decided, you know something, it's not going to happen, the economy's going to be fine, and they decided not to prepare, but you know what's going to happen. When it hits, these people are going to be scrambling. I'd rather be in the position where I have my food, my water, my supplies, my gold, my cash on hand, everything that I need. Now, let's say nothing happens, and all these people were right that nothing is going to happen. Well, I can eat the food, I still have my cash, I still have my gold, I can drink the water, and I can use my supplies. Now, let's say they're completely wrong. The economy comes down. Everyone that listened to these individuals, they're going to be in trouble, because inflation's going to hit, credit's going to freeze, it's going to be very difficult to get supplies in the market, in the supermarkets, in the stores. And if you don't have supplies, just like when a hurricane hits, you're going to be scrambling. And believe me, in Texas and Florida, people were scrambling at the last minute. People were going into stores trying to get whatever they possibly can, whatever they possibly could, because they knew that if they didn't get it then, they were going to be in big trouble. So get prepared, get ready, because it looks like we're headed into this collapse scenario.